Hello traders, this is Kevin Loughlin. I'm a harmonic counter-trend trader, and as the name suggests, I use harmonic patterns in my trading. I also use Elliott wave principle, and I inform my trading decisions with classical technical analysis and Japanese candlestick patterns. This evening, which again is another cold, wet, squall evening here in London as we move into the new year, I'd like to discuss 4 trades, 3 of which I'm currently involved in, and one, the Aussie US dollar I mentioned in the previous video, and I'm just keeping an eye on it to see what it does. So the first one we're going to look at is a trade that I entered before Christmas, and again I think we discussed this in the last video. And what appealed to me in this trade was the harmonic pattern that was set up, the X, A, B, C and D, with some nice fibs defining that pattern. Now also, on the daily, the RSI was oversold. Since then it has rallied. My targets here, which I believe is a 382 from the 886. So I've entered here at the 886 retracement of XA. And the first target, or target 1, is a 382 of CD. This is a reasonably conservative target, and it's actually proved to be pretty consistent in terms of producing profits. At the moment I am in deficit in this one, so I'm suffering some pips of pain in this one. It's all the way down here. My stop is below X, and I say my target is here. What we can see now on the daily is that we've got divergence here. So I have the expectation, hopefully this candle will close perhaps as some form of morning star, which is a bullish indication, and perhaps we may get back up into our target 1. So that's ongoing at the moment. Now the next pair I'd like to look at is a trade I'm also involved in, and it's the Aussie dollar against the Singapore dollar. And again, we've got some nice fibs. We have this big bull leg here, and it comes down into 618 plus. It comes back up. It almost challenges this point, this high here of the 27th of October. Yeah, and this is a 4-hour chart. But what we have here, obviously, is a corrective pattern because it's generally going sidewards within this range. And here we have our harmonic pattern. Because it's a 61.8, it's got a nice retrace here of BC, down to C of 50 to 61.8. What appealed to me on this one, and I think I'm in around here, is that it was getting overbought, and now again it's diverging. So we can see how we have the upward movement of price, but we don't have a congruent upward movement of the RSI or the strength of bulls wanting to push it up. My stops is above the X point, and because I've got in here somewhere, again I'll check that, because I've got in there, so I'm short this pair, the Aussie dollar against the Singapore dollar at, what's it, 272. Yeah, so I've got involved in this at 272, so I front ran this. It actually come up to 94.1 and did what's known as an equivalent AB equals CD, and then reversed, and it was looking good up to that point because I was in a 272, and it came down to 228, say 230. So it was about 40 pips in my favour at that point. Then it decided to rally, of course, as can happen, and so I'm also in deficit in this one at the moment. But the trade's still active, and we've got divergence here on the RSI, and I'm still involved. My target's about here, which is a 13,203, and that's a 382 of the CD leg. So that's ongoing. And the next trade I'd like to look at, again, another one I got involved in there recently. What's interesting about the GB pound USD is we have this big obvious downtrend, and after a downtrend, or an uptrend for that matter, or an impulse from an Elliott perspective, we're going to have a correction. So we have this correction, sidewards movement here, a sort of expanding sidewards movement. And I've actually traded 3 harmonic patterns that have been consecutive on this one. So I got involved in this one here, took profits here, left half position on at break even once I took the first profits, 50 something pips, and the second half rally come back up against my stop, and the position was closed. Then I come back down, did a 50 retracement here of this axis, 50 plus, back up into here, and then back down. So I got involved in this down here. Actually, I think I got involved in this at about, I think I did a chart where I was involved in about 5. I think I was involved in this at about 15,460. But what often happens, this one turned into what Scott Carney calls an alternate bat. An alternate bat is actually a 3, a 2, in this case it's a 50. And often they challenge the 113, which is another calculation or manipulation of the Fibonacci numbers. I had my stop just in below it, so I just survived this trade, and it did rally and come back in. I was taking a revised target 1 around here because this continued down, so I drew my, in this case the D would have been here where A is here, and there's the C, yeah, you can see the D. So originally I based my first target on a D point here, PRZ point here, but because it decreased in price down to this point, I revised that and moved my target down. In fact, it did come up again and hit the original target 1. But once I hit my revised target 1, I took off those profits, moved my stop to break even, which was down here somewhere, and it decreased in value in terms of price, and then it rallied nicely again up to here. And having drawn some fibs, I realized that this was a potential Gartley setting up with a 618. If I expand, it might be better to see this. It came back up into 618 here off this, come down into just shy of a 50% retracement of AB, and I front ran this pattern here. I think I'm in 15,666, so in around here, 15,666, and it came down, hit target 1. So my second half position is now at break even at the 666 price. And as you can see, we have these candles here. These candles, from a Japanese candlestick perspective, when they appear after a bear movement, could be interpreted, they're doji-like, so it shows there's indecision. The bulls did try to push up, but the bears were more dominant and pushed them down, and there's no big conclusion on what's going to happen. When you get these type of doji type candles, you could describe them as an inverted hammer, and inverted hammers could be bullish, so therefore this could go up. Or you could say, and indeed when we're talking about Elliott wave harmonic patterns, etc., we're talking about the mood of the participants in the markets, i.e. the buyers, the sellers, the bulls and the bears, and we could interpret this as a reluctance to push the price up, or a definite resistance to pushing the price upwards, and this could be bearish. So I'm obviously want to see it as being bearish because I want to see this come down further, and so I can make more profits. I think I made about just over 60 pips profit here in this first position. I think I took about 50 odds, 55 pips off this. This alternate bull bat type harmonic pattern, I think I took about, I can't remember, maybe around 50. So if I was in at 460, thereabouts, I come up to about, so around here. I think I took about 50 or 60 pips profit off here. Left my other half position on and rallied up, and I took about 200 pips profit from the second position. So we've got stops at break even this, and I'm hoping it's going to come down even further. But because the second half's at break even, I'm not considering that as profits yet. I'll just let it run. Okay, so they're ongoing, and very quickly, because time is running out for this. Again, let's have a look at the Aussie. I consider getting involved in this little harmonic pattern in here. We have a 618 retrace. This one's coming down to just shy of 50, I believe. And yeah, it's actually just on the 50, and it's coming up into here. We've got quite decently sort of overbought on the RSI. But I think I'm going to wait for this one to see if it can break this point here and get up into some sort of harmonic pattern up here, and then consider getting short on it. Again, that's coming up in the 76 more classic conclusion zone or PRZ zone. This dotted red line are equivalents. So if that became if you can think of this as an A, B, C, and D, and the equivalent A, B, C, D, completion would be better because it gives a better risk reward around and close to the 886. Okay, traders, that's the weekly update on a few pairs I'm currently looking at the moment, and also involved in as well. So good trading, and until the next update, good luck.